I'm going to talk about how you choose your own trades using OracleTrader as a guide. Now, I can't possibly cover all aspects of this subject, but I'm going to show you how I personally choose swing trades, which are multi-day trades as opposed to a quick day trade. I usually start out by looking at the basic list, and of course by that I mean the ratings. Now, I want to look at the top, let's say 7 stocks in the ratings list, and I do so by doing a shift click to highlight all of these. Then I click Show Chart, which will bring up the daily charts for each of those stocks that I just highlighted. Now notice that there's a pop-up menu on the top which gives me the list of the stocks I just chose, so I can walk through them one at a time. And let's do that. Let's start with the top one, which is MO. The first thing I notice is that it appears a bit overextended. I also don't like that heavy selling in the recent session, so let's eliminate that one right out of the gate. Next one is ALXN. One nice aspect to this chart is it has a nice steady uptrend. I also really like that recent heavy buying action. The one negative is that it has a hard time busting through that resistance line, but there's more positives than negatives on this one, so we'll mark that as a watcher. Next one is PTRY. Again, this one has a nice strong uptrend, but here's one thing that jumped out. Look at that pattern there, and look at that pattern there. That looks very similar to its recent pattern. So if it repeats its history, it should soar, because it has done so in the past. That's a good one to watch, so we'll mark that as a watcher. Next one is BVN. The one thing that jumped out here is, notice that dip. That looks very similar to the recent dip, and if history repeats again, it should soar. The other thing I really like is it's got strong buying action in the last few sessions. Let's take a look at another indicator to confirm some of this. I just clicked the moving average. Notice how it's having a hard time busting through that moving average. However, when it did that before and broke through, it soared. Also, this stock is of the gold sector, I noticed, and gold is very hot right now, so this is a very strong stock to watch. We'll mark that one. Last one we'll look at is LTM. The one positive about this, it has a pattern that I like to call the pin or the tail. Whenever you see that particular pattern, stocks tend to rise. Now, the one negative is look how it's having a hard time busting through that resistance level. That's not a good sign. Also, the volume is not particularly spectacular. So let's eliminate this one. Okay, that leaves me with 3 stocks that I like. The strongest one is probably BVN, and a close second is PTRY. I just want to play 2 stocks for now, so let's forget ALXN. Let's see how we did on PTRY. There's my buy point. I like to buy it at the session close, and I'm going to hold for 2 days, so there's my sell point. And the result was a nice, fat 3.6%. Now that's a good return for a 2-day hold. Okay, let's see how we did on BVN. There's my buy point, and then I hold for 2 days, and there's my sell point. We didn't do all that great on this one. We finished basically flat. Now, here's what's interesting, though. Finishing flat, I may have elected to hold for 1 more day. Had I done so, my goodness, there's a 12% return. Now, that would have been a nice gain. Now, here's some refinements that you can implement to improve your overall trading. The number 1 rule is that the market sentiment trumps all. Now, what do I mean by market sentiment? Well, I mean the mood of the market. If you look at the indices and they're groveling in the red, that means the market's in a bad mood. If I confirm that by looking at the Dow intraday, look how it's slanting downwards. That is a bad sign. That will tend to drop all stocks. Most stocks follow the market's lead. Keep that in mind. Another very important rule is that early strength draws sellers. Let me show you a classic example. Here's an intraday chart of BVN. There is day 1, day 2. Notice how the stock spikes up at the open on that day, and look how it tumbles for a good hour. Had you bought at the high, you would have been in the loss column all day long. The reverse of that rule is true also. Early weakness draws buyers. Here's an example. There's your day one. On the very next day, the stock plummets at the open. Notice, though, how it rallies for a good hour and a half. So these are very important things to remember when you're choosing entry points, exit points, etc.